Good morning, everybody, and welcome to our very first live stream here from The Good, the Bad, and the Bitcoin. My name is Dirk Hartig. I've been a trader and investor for 25 years now, since 1998. And in this type of live stream from now on going forwards every week, I want to talk about trading strategies. I want to prepare you a little bit for the what is to come for the week. I want to prepare you a little bit on how you can trade certain trades in terms of strategies. We are also going to concentrate here on so-called options trading. So I want to explain how I build a portfolio of options, especially on the short selling side, how I manage the risk, and so on and so forth. And yeah, so we can make sure that on is this actually working here? So it's streaming. Let me just quickly check that we are really live and that everything is working as intended. Yeah. Okay, good. I was a little bit confused there for a short second. Sorry for that. Yeah, like I just said, we want to concentrate here on options trading. I want to show you some strategies, especially when short selling options. So being an option writer, collecting the premium for that. I think it's very important to learn how to manage the risk here. So you can look a little bit over my shoulder to see how I'm doing things. If you want content like this, of course, I'm doing everything for free here. Please leave me a like, subscribe to this channel so I can continue to do this in the future, also totally free for you. All right, let's just right away jump into the action. Let me make my screen a little bit bigger. So in terms of trading today, the way I build an options portfolio is I'm using here, in this case, a demo version for demonstration purposes, of course, of the Saxo Trader. You'll find a link in the description to where you can also open a demo account there, which is, I think, free for 30 days. And you can use this demo account then to practice also a little bit of option trading or other trading for this fact. As I said, link in the description of this video. I'm not affiliated with Saxo Bank, so I don't collect any commissions or anything if you also decide to use them for this. But before we actually enter some trades, of course, we should have a look at how certain assets are doing. I want to talk, obviously, thus the name of the channel, a little bit about cryptocurrencies, especially Bitcoin, what is happening there. We are going to have a look at future economic event, especially for this week. I want to introduce you to my sniper trading sniper signal generator, that is, which I'm using to find good trade entries. Want to talk about some recent setups there as well. And then by the end of the show, we are going to enter, of course, also some trades. Now, the nice thing is, since this is a new channel, probably nobody's watching yet, but that's totally okay. If you watch a recording of this video, you can pause at any time to kind of gain an understanding of what I'm doing here. Good. All right, let's have a quick look here really at some charts before we start building up some positions. First of all, Bitcoin, and when I say Bitcoin, you can kind of say the same thing about Ethereum, although in the last weeks, they have been diverting a little bit from each other. For sure, we saw like more volatility than in Ethereum. After really a long period of time we spent in this hideous sideways range where it took us so long to break out to the north over this area here between 27,800 US dollars and 28,000 US dollars up to 31,000 US dollars. We finally managed this. So our new range here is a bit bound here at the moment between 38,000 on the upper side. If we want to go that low, 31,000 at the lower side, although probably before going there, we would see a reaction to the upper side again. Now, I have been getting also here on Bitcoin some signals on my sniper trader. So that's the one here On the top left, you can see the sell signals there, although I decided not to trade those because I think we are in the phase where Bitcoin is slowly building up momentum for the bull market again. That doesn't mean that we cannot see it drop down to 34,000, 32,000, or even 31,000 US dollars. But I think it's very dangerous to play the short trades at the moment. So I prefer waiting for swing trade long entries. I'm long Bitcoin long term anyway. I've been building up position all the way back in 2021 when we started dropping below 30,000 again. All the way down to 16,500 US dollars, and this is slowly paying up. So careful if you are there on the short side for Bitcoin trading. You really might want to be careful with short positions because we've seen how quickly after a pullback, especially in the last days, the market goes to the north again, and you really don't want to be caught on the wrong side of the market there, in my opinion. We also can see this here Bitcoin dominance still overall on the rise, and this is also typical for the beginnings of a bull market. Actually, I have been saying this since basically September last year when inflation first started peaking down again. Or more on that at another time. S&P 500 here, the largest US stock index, a bit limited in my opinion, slowly to the upside. You can actually take away this yellow line here. We don't need that anymore. So it's all about whether we can go over the zone of 4,580 to 4,600 US dollars. I don't know if we really are going to surpass this. Might want to think actually that December might be a little bit on the weaker side again, maybe that we see a pullback again to 4,400, but let's see. I don't want to do the trade now. I want to really wait and see how the price action is when we move up to this line of resistance up there. Yeah, euro dollar, very interesting at the moment. If we look at the Fibonacci retracement from this whole trend that when we saw the last peak beginning of January 2021 here at around about 122 in euro US dollar, and then we had this large move down all the way to 0.95, and now we're exactly at the 50% retracement of this. So this is kind of an interesting setup in my opinion. We might want to build up some options positions in this later, where I can explain a little bit of risk management. Second thing where I also probably want to actually do a trade today, build up position, is gold here. I've been always saying, and I need to prolong actually this red box here. By the way, this is all drawn out already because I used to have another YouTube channel that I was running together with a broker, but I decided I want to really concentrate on my own stuff. So if you're watching this, my face looks familiar. You've seen me before. And yeah, we have this big zone here, in my opinion. I always say above 2,000 US dollars gold at the moment is a short for me. So I want to capitalize on that also later by building up some position, because we also see some nice volatility at the moment in gold, in my opinion. All right, so let's see. First of all, let's also look here at what we are expecting in terms of economic numbers the next days. I think really only very important stuff this week is here Tuesday evening at 8 p.m. That is CET, so I think it would be 7 p.m. UTC, FOMC minutes, where we kind of get to have an idea for the December meeting for the Fed. Are we going to see another rate hike? Are they going to keep it stable? And actually, what I always like to do to get an opinion on this is to use this CME Fed watch tool, so from the CME group, where you can see now, for example, for the meeting on the 30th of December, 99.8% of market participants are expecting interest rates to stay stable. There shouldn't be much of a surprise, in my opinion, if we see inflation like going crazy again, which we probably are not going to do. This might change, of course, but it's pretty much set in stone, which gives us the third interest rate decision in a row now where things go stable. My working theory at the moment is, and has been for the past month, that we are going to see stable inflation rates And then around maybe April, May, June next year, we're going to see interest rates coming down again, because probably the economy will need some money again because of a debt problem that the USA has. I did a video just recently on this as well. Browse through the channel to find it. Massive debt problems the USA is facing in terms of GDP, debt to GDP ratio, which are for sure going to have an effect not only on the economy, but also especially on private households. And but this is not of so much concern now for the swing trades we are building up. The swing trading, so my system, this SSG system, as I call it, stands for Sniper Signal Generator. In a nutshell, is a system where I kind of hard-coded in PineScript everything that I like to look for in a stock or in an asset, generally speaking, for turnaround. So where if we see an asset rising, where we could see a peak, for example, if we see an asset falling, where we could see the bottom of the asset, it gives me signals. So it keeps me from that I have to manually screen through all of these assets by myself. You can, for example, see here up on Microsoft, I currently had some sell signals there. I actually built up a position also, which I also copied here to this demo account where I have a short call now. More on that in a moment, of course, what that means. And I'm watching currently the largest US stocks. So another one, for example, we had on Tesla also down here. I'll show you this at a bigger charts. I'm watching also, of course, Bitcoin, Ethereum. I'm watching the S&P 500, the Nasdaq, and of course, several currency pairs plus gold. And whenever I get signals there, I, of course, analyze the chart a little bit more. But in general, I'm building up position then, with the exception of Ethereum and Bitcoin. If I want to speculate on shorts there at the moment. More on that throughout the series of these videos where I'm going to explain this in a little more. I'm also going to build up a Telegram group and an option trading room where you can see all of this live. As I said, this channel is still brand new, so give me a little bit while, but if you want to stay updated on this, leave me a like, subscribe to the channel so you can see some more there. Okay, let's go right in here, and I want to take, for example, now Microsoft as an example. So what you can see here, daily chart of Microsoft, and I recently got those 3 sell signals here. So one was here, one was here, and one was here. And where, of course, then if you want to trade these sell signals, 2 things that can happen. What we very often see is if we see the stock going quite a distance from this blue line here, which is an exponential moving average. Actually, so a daily 100 days exponential moving average, we very often see something like this, that this is not the tool, that the market eventually will pull back to this moving average. However, sometimes it can be, you can get a lot of those signals. So it's not set in stone that exactly when a signal like this appears, that the market is going to turn around and head back to this 100 days moving average. So one thing you could do, of course, now is do the directional trade. So you could short sell Microsoft, for example, in this moment. But then you would be very dependent on the timing, of course. And I'll give you an example. So when I built up an option position on this one, the price was around here, 365 US dollars. Now you saw we went all the way up again before that, before it came down. And right now it seems like Microsoft is going to have a strong opening, by the way, today as well, again. Probably because of all this thing with the guy from OpenAI that is probably going to join Microsoft. So I choose to not play this as a directional trade. I choose to, in this case, to sell a short call. For this one, I got a premium of $2.38 per position I did. And if I would close this right now, I would pay $3 US. So I'm a little bit down on this position. However, that doesn't really matter because this call is going to be to expire on the 18th, I think 15th of December it is. And if the price of Microsoft on the 15th of December is not over 385 US dollars, this option is going to expire worthless, which means I can collect the premium that I got. I can keep the premium that I got. Now, if we approach 385 US dollars, a whole different story. Then I need to take some action. I need to buy some shares to hedge my position. Since the US market is opening this afternoon, of course, this is something we cannot trade. However, what we can look at the moment, as I said earlier, for example, is gold. And you can see gold is trading here at the moment. Let me put up a big gold chart for you. Here we go again. Let's close this one. So trading at the moment here, 1,978 US dollars. And like I said, I don't think gold has the potential actually to really break out massively over 2,000 US dollars, 2,100 US dollars. So somewhere in this box, I'm expecting that we see a reversal to the downside again, and that it's going to be within the next month. So I could, of course, now say I'm going to my broker. I'm going to build up a short position on gold. However, again, in my opinion, then I'm really dependent on timing. And of course, I don't know yet, are we going to immediately turn around here and go further down? Is the market going up first and then going down again? Or is it going up all the way? So again, this is called a directional trade. If I choose to short the CFD with my broker at the moment in gold, I'm really dependent that it rather quickly goes into my direction because I'm paying a daily swap, then also, with overnight transaction fees and so on and so forth. The longer I hold on to the position daily, I'm going to lose a little bit. If you've been trading, you might have noticed that brokers charge overnight fees if you hold on to a position, which of course it's not like scam or something, absolutely makes sense. So what I want to do here instead, I want to do this position actually with an option and not with a directional trade. And in order to speculate on falling prices with options, I can do two things. I can buy a put. So a put would be, let's simulate this here with a Saxo trader. We go to option strategies. So I could buy, I'm choosing a put here, for example, a 1,980 put. And for 100 shares, so to say, 100 options on this, I would pay 2,290 US dollars. This put would allow me until the expiry, which is on the 20th of September, to sell gold for 1,980 US dollars. And you can see here on this risk graph, if by expiry the price of gold is below around 1,960 US dollars, 1,958 US dollars, I get to make profit. So if gold goes all the way down to 1,900 US dollars, for example, my put would be worth a lot of money because I can sell gold for 1,980 when the market price is at 1,900. So my put would be worth, in this case, 80 US dollars per ounce of gold. So I would obviously gain a lot of money. My profit potential is unlimited. However, if this doesn't happen by the 20th of December and gold is still trading above my break-even point here, or be above my, this is called the strike price, 1,980, my money that I invested to buy this put is all gone. So what I could do instead of buying the put is I could do the opposite. I could be the seller of a so-called call option. What does that mean in this case? That means I could, for example, say I'm going to sell the right to somebody else to buy gold from me for the price of 1,980 US dollars per ounce until the 20th of December. So I'm kind of like somebody who insures you. I give you the right to buy gold from me for 1,980 US dollars on the 20th of September. If the price then is at 2,100 US dollars per ounce, of course, you're going to say, I'm going to execute my right. I want to buy my gold ounces from Dirk for 1,980 US dollars. If the price is below 1,980, you're not going to execute your right. And I get to keep those 2,900 US dollars as premium. However, you can see already I receive a premium immediately. However, my risk, of course, is unlimited. If gold for whatever reason goes to 3,000 US dollars. I don't know why that should happen, but let's just pretend it does. I would lose obviously a lot of money, but I can counter this by doing risk management, of course, in the meantime. So, however, I don't think it makes sense very much from a risk perspective to sell the right to buy from me at the current price. So what I probably want to investigate here is how much would I actually get for this call if I put the so-called strike price at, let's say, 2,100 US dollars. Here things look a lot different, of course. Again, let's go here with 2,050 US dollars, actually. So now I would sell the right to somebody else, for example, you or whoever takes the opposite direction of my trade, to buy gold from me on the 20th of December for 2,050 US dollars. Right now, the market price is at 1,980 US dollars roundabout. So I still have a lot of margin to the upside. If I want to do this, I would get for this 742 US dollars for 100 option contracts, so 100 ounces of gold. I could, of course, now say like, okay, it's a little bit too much risk. I'm going here with 50 or 60. For this, I would receive $444. We could now also add a leg and say, yeah, okay, this is the upside. I don't think gold is going above 2,050 US dollars until 20th of December. But I also maybe think, well, it's probably also not going, let's see where we have here the last levels of support. It's also not going maybe below 1,900 US dollars. So I could, for example, add a leg here to this and sell, in this case, not a call, but a put with a strike of 1,900 US dollars. And then you would see like that I win. So I get to keep all this premium, in this case, a total of around 546 US dollars. Hold on a second. Yeah, here we go. I get to keep this whole premium if the price of gold is somewhere between 1,900 and 2,050 US dollars a month from now. If it goes above 2,050 US dollars, I'm going to lose money. If it goes below 1,900 US dollars, I'm going to lose money as well. However, I want to keep things now at first a little bit simple. So I'm just going to concentrate here on the call. And you can see all types of things here, mid volatility, delta and percent, gamma, and so on. Don't worry about these yet. I'm going to explain these in the next shows as the price of gold develops, what that really means. In a nutshell, basically means what would I have to do now in order to completely hedge the risk out of this position. So if I receive a premium now and at the same time I would buy 10 ounces of gold, this would be a net neutral risk position. I would, at the moment, at this price, not have any risk for that. However, I tend to do those delta hedges should the price really approach 2,050 US dollars, for example. So we're going to do this now. I'm going to sell this call now. Yeah, I have to double click on this. And you can see now I have an option here, the next one. Gold here, I sold 60 contracts, so for 60 ounces. And I got my premium for this. Of course, here in the beginning, the position is in loss if I would have to close it immediately again. However, what we should see over the next time, if gold doesn't move much anymore, by the day, this option is going to become less and less worth, because the likelihood of gold reaching 2,050 US dollars with every day from now until the 20th of December is going to get lower. So every day we don't reach 2015, the likelihood of me keeping this premium I just received is going to rise. And this is why I like options so much, especially short selling options, because you get the premium immediately and then you just need to manage your risk a little bit. Of course, as everywhere, you can don't do too much, you don't want to do too much risk. Now, what I also do is I want to set an alarm here, and I'm actually going to do this on TradingView. What did we have? Gold here. So I want to put a new alert here. If the gold price is greater than, let's say, 2040 until December, not an open-ended alert, of course, until December 20th at 6 p.m. I'm going to get an alert. I'm going to call this gold price higher than 2040 US dollars. Why am I doing this? Because I want to be sure that I don't miss out. If this position now really goes against me and gold goes up, up, up and approaches my strike price, the 2050, the strike price of 2050, I want to make sure that I have still the time to manage the risk of this position, if you get what I mean. But for now, we are just going to leave this. We're going to revisit this, of course, over the course of the next day. So next thing we could do here also, my opinion, and remember, I'm just doing this for demonstration purposes here at the moment, because we don't have any new signals from my SSG system at the moment where we really need to take action is gold. As I said, is euro dollar. As I said, euro dollar exactly at this 50% retracement. I think it's going to have a hard time going much beyond 110. So and I also think it's going to have a hard time going much lower than 107 at the moment. So I want to also do a position here in options, and I'm going here for euro dollar, obviously. Again, right click, I'm opening my option strategies. Need to show my risk graph. I want to be on the sell side again. I want to see what kind of premium I would get here for 1 month. You can, of course, go here like 2 months or 3 months options. The longer the option is still running, of course, the more premium you will get. You can see this here. So let's go to 1 month here. If I go to a strike, let's say of 111 for this short call, I would, for an exposure of 50,000 euros, I would get the 1 month option. I would get at the moment 121 US dollars. For the same option, 2 months, $245, and 3 months, 387 US dollars. This is, of course, because the longer the option runs still, the longer the expiry of the option is away again, the higher the likelihood is that my strike 111 is going to be hit. And what you see is, that's why I normally concentrate on short running options 1 to 3 months, because this option worth is going to halve every month if the price doesn't change. You're going to have a curve like this going down. I'm working at the moment on an option masterclass course also, where I also already published the first episode, so you might want to look in this, and these are like concepts I'm explaining there. However, we really want to keep here 1 month, and I actually want to add a leg to this still. I also want, in this case, to sell the put here, but not the 111 put. But where did we have euro US dollar? I want to have a look at the 107 put in this case. Saxo Trader, here we go. So 107. Not worth a lot here. Let's see how the 108 one is doing. Probably also not so great. That's all right here. So in total, 257 US dollars I could get here. Now, then my bet is until the 20th of December that euro dollar stays between 108 and 111. By the way, what is important always to know is Forex options usually have a so-called European execution method. That means only on the day of expiry they can be exercised. Whereas stock options can also usually be exercised during the whole time until the expiry of the option. But also more on that as we continue as well. Okay, so I say, yeah, well, I'm satisfied with this. I'm going to receive 256 US dollars for this, 257. Going to do this trade quickly. You can see this is also here. So in total, we collected, what did we do here today? A little bit of premium for our gold option. That was, let me see, do we still have this information? Yeah, we collected 500 and let's say 68 US dollars for our gold options, and we collected 500, 600, 700, 800, let's say $870 of premium, which is already added here to our cash account. As you can see here, at 101,500 now, because I did some trades, obviously, in the past here to prepare for this. And now all we need to do is we need to manage the risk here. As the days go by, if there are not great changes in the price of gold, of Microsoft, of euro US dollar, we are going to slowly see the premium of these options going down, which is good for us because we obviously want to keep the whole premium that we just collected. If we see prices going to those strikes, of course, we need to get busy. We need to start hedging the risk. This is also not a problem. The problem would be, for example, here in gold, if we don't do anything and the price is, let's say, at 1,100 US dollars by the expiry, then we would lose a lot of money. That's why I did this alarm. I'm going to do the same here for euro US dollar now. So I want to add an alarm here on trading view. Add alarm, euro US dollar price is greater than 110. Let's say 110.90 until December's euro US dollar higher than 110.90. Create, and we need to create another one. Euro US dollar is less than, what was the strike we had again here? 108. So euro US dollar is less than 108.20. Euro US dollar lower than 108.20. So again here, just to make sure I get notified if we see price changes like this, that I can start hedging those positions to take the risk out of those positions. You can see here at the moment that we still have, of those account balance of 101,000 US dollars, we still have 83,000 US dollars in margin available. We only have like 12.8% of our margin utilized. This is important. Never go to like 100% margin utilization, because you will be forced to make some decisions in terms of hedging and so on and so forth that you probably do not want to make at that point in time already. Good. I see already half an hour over. So let's call it a day. As I said already, this type of format we are going to do every week on Monday now to kind of see like how our options positions progressing. Hopefully, actually, we're going to see also some action that maybe puts us in a position where we actually need to take some risk out of those positions, so I can show you how to hedge those. As I said, also in the future, I'm going to have a dedicated Telegram channel for this, where I do live updates and option trading room and so on and so forth. I highly recommend that you subscribe here to this channel to stay updated on what will go on here in the future. Pleasure to see you. I see we actually had 3 people watching this live. Good to see you guys. And yeah, have a good one. Have a good week ahead. And I'm going to see you again very soon. Until then, happy investing.